Hi everyone, good afternoon and welcome to the webinar. My name is Moin Ibrahim and I am Manager Risk Advisory with Premier Brains. I will be the moderator for today's session. Have you ever heard of money laundering? Or do you know that people are using different ways of money laundering, such as people deposit small amount of money to the bank, so banks can't raise questions. Sometimes people used to invoice some other businesses with the names of third parties. Or sometimes people also used to transfer money in cash just to steal the main source. There are some sort of other identity thefts as well. As per one estimate, around 2 to 5% of the global GDP is money laundered every year, and that around USD 800 billion to USD 2 trillion. So that's one of the huge amount that's been laundered in the money. So in order to regulate that money laundering issues, the AML related laws are newly introduced to the market, which require a deep insight to understand the legal provisions, compliance purpose to avoid any sort of penalties and reputational risk. We being Premier Brains, having the philosophy of always doing the right thing, just thought that we should come up for the help of business community and make them understand that what are these regulations, how these apply to the businesses, and how you can fully comply with the businesses. So we have two wonderful speakers today for the session. First one is Mr. Rishi Agarwal, and other one is Mr. Rishi Chavla. Without taking too much of your time, I will quickly introduce Mr. Rishi Chavla, who has around 19 years of experience, out of which 15 years are with Big Four. And currently, he is the partner in Premier Brains and looking after the external audit and other financial services. Whereas our second key speaker, Mr. Rishi Chavla, is partnered with Premier Brains, having experience of around 19 years in audit, valuation, compliance, risk management, and business consulting. So before handing over the floor to our speakers, I just wanted to mention that if you have any query, any question, please do type in the chat box. We'll try our best to address all of your queries at the end of session. Now I will hand over the floor to Mr. Rishi Agarwal to share the insights.
Thank you, Moin, for the good introduction and a quick background on the AML law, how people are using different ways to siphon, to evade tax and avoid being caught with the banking regulations. So AML is nothing new to any country. It has been there for a long time. And it was an effort of FATF and the United Nations when they came up with the recommendation to come up with the AML platform globally. And FATF is mainly focused on having controls on the financial transactions throughout the world. So globally, every country in the world has established their financial intelligence units to control the anti-money laundering practices in each country. Similarly, UAE has come up with National Anti-Money Laundering and CFTC as a governing body to look after the AML transactions. The law which we are going to discuss here is, we are referring to the law number 20 of 2018 on anti-money laundering and combating the financing of terrorism and financing of illegal operations. And GCC, being a member of FATF, is required to implement this law. UAE is one of the first countries in this region to implement the 𝐀𝐬𝐴ML platform, which is used for all reporting under the AML law. We will now discuss about the AML platform. How does it work? What are the solutions it is providing to all the people registered with the 𝐀𝐬𝐴ML? We have seen emails coming for registration of or to register on 𝐀𝐬𝐴ML and to file returns. So what does 𝐀𝐬𝐴ML does? What is the use of this platform? As I said earlier, it is established by the Financial Intelligence Unit of UAE, and it is governed by the National Anti-Money Laundering Body. So the prime focus of it is to collect the data. So when we say collect data, it is not only about registering on the 𝐀𝐻𝐻 platform, but it is also about collecting the data when someone raises a red flag on the platform and files a suspicious transaction reported or a cash transaction report, which we will discuss later in the session. What does a cash transaction report, suspicious transaction report, electronic fund transfer report, or any other red flags, what does it mean? So the prime focus of the 𝐀𝐻𝐻 platform is the collection of data. Now, once the data is collected from the users of 𝐀𝐻𝐻, the next function of 𝐀𝐻𝐻 is to analyze the data. FIU, the Financial Intelligence Unit, have their own scoring system to analyze the reports submitted on 𝐀𝐻𝐻. These reports are then analyzed based on different criteria, which include risk rating based on geographies, on the profile, on the nature of transactions being reported. And these data is then analyzed into different buckets. Once the data is collected and analyzed by 𝐀𝐻𝐻 platform, the data is exchanged with other regulatory agencies, be it national or international. And then when I say international, it even includes all data relating to criminal regulations, including Interpol. So any data which is on the 𝐀𝐻𝐻 platform and is sensitive for any other part of the world, it is bound to get reported based on the requirement of the data. Now, when we talk about DNFBP, we have heard this term a lot. DNFBP are required to register. They need to have compliance. So what does it mean? Designated non-financial business and professionals are those people under various categories which are required to comply in the AML platform. And we will also discuss why they are required to register, what was the need to include these people to register under the AML law. DNFBPs, as covered by the law, are basically brokers and real estate agents. Brokers and real estate agents normally are deal in sale and purchase of properties, and they are in touch with people where money is misused, sometimes in the form of cash or in the nature of benami transactions, where people are buying or paying on someone else's behalf, or the property is undervalued or overvalued to support the movement of funds. So that was one of the basic reasons that brokers and real estate agents were included in this. So people who are only doing leasing business are not a part of DNFBPs, but people who are into sale and purchase of real estate properties are a part of DNFBPs. The next category of people under DNFBPs are dealers in precious metals and stones. Again, the same thing. People tend to buy stones in the form of cash, and it's very difficult to find out or trace who is buying the stones and who is the ultimate user or owner of the stones or precious metals. When I say precious metals and stones, there are regulations under the law to define what are precious metals and stones. So so we need to refer to the regulations to identify and understand which stones and metals are falling under the category. But just to give an overview, gold, platinum are all considered under precious metals. Gems and jewelries are considered under stones. Now, the regulations in place for DNFBPs are to report transactions anything above 55,000 dirhams, be it resident or non-resident in UAE. The third category of people are lawyers, notaries, and independent legal professionals. These are most of the key people come to them and tell them about the crimes or the transactions which are not in the normal course of business. And these people are aware of what is happening in the country. As we say, sometimes tax manipulation or tax planning, these people are involved with this, or in providing the loopholes in the law, or protecting the innocent, and sometimes at the same time criminals are involved. So all type of legal cases and the transactions which are not in the normal course of business are normally to the knowledge of lawyers, notaries, and other independent legal professionals. So that's the reason DNFBPs include this category of people, and they are also required to register. The next category is the auditors and accountants, most favorite. Auditors are always getting an access to a lot of information. They have access to every transaction that is happening in the company at the time of audit. So the government made it an obligatory duty on the auditors and accountants by default to get registered. Person who has access to the information and who is knowledge of any unlawful activity happening in the client side is required to report. The next category is business service providers, including trust. This includes mostly people who are providing fiduciary services like company formation, managing the company, or managing the funds on behalf of other people. And it includes PROs as well. So these people are also required to register under the AML law. Then there are regulatory authorities, which are the legislative authorities. Those are required to register. And last category is the non-profit organizations. This one we have already covered in the previous slide, who are DNFPPs. And this one, the DNFPPs, brokers and real estate agents, we just talked about them, that people who are engaged in the purchase and sale of real estate. For precious metals, people who are engaged in gold, silver, platinum, and palladium are all considered under the precious metals, and transactions over 55,000 needs to be reported. Okay. So lawyers, notaries, and other independent legal professionals, it also includes the nature of the clients, where people are managing bank accounts, savings accounts, or securities, which I did not mention earlier, and who are selling and buying commercial entities on behalf of others. So these people are also included under the lawyers, notaries, and other independent legal professionals, including auditors and accountants. So provider of corporate service trust will also include anyone who is acting as a nominee shareholder or a trustee, or working as a director or secretary of a company, or as a partner in a similar position, or providing a registered office. So these all category of people are considered as providers of corporate services and trust. So these people are covered under the AML law. And it's very important to note that it's always a substance over form approach. We don't go only by that a person is a shareholder in the company, but if he is holding those shares as a nominee shareholders, we have to look at the substance over form approach. And the law is very clear that we have to understand the basis of each transaction, not just go by the documents and close it there. So regulatory authorities and NPOs, I will give you some examples here who are included under the regulatory authorities and the NPOs. The regulatory authorities includes all the free zones in UAE, any free zone, and the Department of Economic Departments. So these regulators are also included as reporting authorities to the central bank. Non-profit organizations are also included in the law, because most of the time it happens that in the name of charity or educational activity or religious activities, there is a movement of funds, and the true nature of the funds is sometimes concealed. That's the reason non-profit organizations are also included under the AML law. We will quickly talk about the compliance requirements of registered people under the AML law. The compliance requirements are the people needs to identify risk. Now, risk identification is not something which is just based on common sense, but there are procedures to identify a risk. And I will discuss about the world checks and the customer due diligence reports later in the presentation. But just to let you know that based on the categories of people, like categories of clients, for example, their geography, their products, what they are dealing, if they are dealing in like gold, metal, or if they are dealing with wood, obviously the risk rating would be different for both categories of people. So we need to differentiate between people. If someone is dealing with a customer in sanctioned country or someone is dealing with a customer in US, obviously the risk profiling will be different. So we need to identify risk when we accept clients or on a continuous clients. If there's a changes in the profile, we need to assess the risk. What are the risks that the particular client could be exposed to anti-money laundering instances? So that is called identification of risk. Then the second is the mitigation of risk. We need to have internal policies, controls. As a DNFBP, we need to develop policies. So we need to have, I will show you the format of a policy, how the policies look like, but the policy should at a minimum cover the whistleblowing concept, what needs to be done when we identify risk, what needs to be done to identify a risk, how a risk should be documented. So all those things should be covered in the policies, controls, and procedures a company is required to have. Third, the most important thing under the AML law is the customer due diligence. The customer due diligence is related to step number 1 of identification of risk. The customer due diligence, I'll take you through a format of the form. We should say, we should explain the background of the client, the source of income, their risk rating, what are the likely chance that they are exposed to AML, and lastly is their world check report, their Google check report, any media news they have. So everything should be documented in a customer due diligence form. And this becomes like a background in case of any inspection from the AML authorities for not doing a proper background check on any client. The fourth step is the suspicious transactions reported. In case a person comes across a suspicious transaction, that needs to be reported on the 𝐀𝐚𝐮𝐲 platform. And the process is not very difficult, but it's a time-consuming process. We have instances where we were required to do a STR for some instance of a transaction, and it took us quite a good time initially to do a STR filing, although we will talk to you in detail about the STR reports in the later session. But just to let you know, the 𝐀𝐚L platform is very user-friendly to do the STR reporting. The governance framework means the appointment of a compliance officer in the company and establishing a framework which is developing policies and procedures so that to ensure that we are following the AML law. Last is maintaining of records, not less than 5 years. So whatever we do, be it the compliance officer, be it the policies, procedures, be it the customer due diligence, be it the risk ratings, be it the world checks. So we need to keep the records in place. Compliance officer, this word we have used and heard now quite often, but I will take you in detail. What are the roles of a compliance officer under the AML law? The basic role of a compliance officer is to detect transactions which are relating to crime. Now, crime is defined. Crime is defined, which is not usual in nature, and it is defined under the law. So any transactions which relates to crime has to be detected by the role of compliance officer. Now, how he does it at the company level is a matter of training. Through trainings, people in the company has to be made aware of what is a crime, how to detect transactions, and what course of action needs to be done in the case of a crime. One person alone cannot detect all the transactions in the company. The second role of a compliance officer is to review, scrutinize, and study records concerning suspicious transactions reporting and take decision whether to inform FIU or not. There are instances in the company that when a transaction seems suspicious, but it doesn't seem to be of that nature that you need to report to FIU. So there's a gray line. So that decision has to be taken by the compliance officer. The next is on the staff trainings. The compliance officer has to make sure that the trainings are done of the staff. and he has an acknowledgement that every staff has undertaken a training. There are the central bank keeps on updating the list of people who are considered under the terrorist financing, and those updates are regularly required to be given to people on a regular interval, even if the training has been imparted to them on an annual basis. But regular updates to AML are also required very frequently. Then the next thing is the review policies and procedures. As the red flags and the lists of sanctioned countries or any development happen under the law, the policies and procedures needs to be developed, has to be changed, has to be reviewed and revised on a regular basis. This is another responsibility of the compliance officer. And the lastly is the coordination with financial intelligence unit. In case of any STR or in any case, any inquiry that comes to compliance officer, it is his responsibility to coordinate with FIU. So this we just discussed what DNFP should do to mitigate this. Basically, customer due diligence, compliance, policies, procedures, training, then ongoing testing of overall effectiveness of the process. The requirements, I'll just quickly take you through the policies, procedures, and control. What are the requirements of a policies procedure? There are certain requirements that it should be minimum, it should be obviously in writing, but should be approved by the senior management. It should give an overview of the law, and secondly also gives definitions, what is a suspicious activity, how to manage it, what is the procedure to report a suspicious activity, and when a regulator calls for an inquiry, what protocol should be followed. So all these things should be documented in the policies procedures. Then the other thing is the customer due diligence form, which I just mentioned in my previous slides. The customer due diligence form has got 7 key elements, and which includes the development of profile of a customer, the identification of the person, like who is the UBO, that also needs to be documented in the CDD form. Then assessment plus grading risk based on the risk rating criteria of relating to any client. Then whether we accept that client or no, what is the monitoring process, whether we should monitor the risk rating every year, after every 2 years, or after every 3 years, or less than that. So that needs to be documented in the CDD form. Then any investigation, in case we get anything weird in the world check or in the Google check on the media, that needs to be documented. And the most important thing is documentation, documentation, and documentation. Ongoing testing of overall effectiveness of the compliance program to mitigate the risk includes basically review of the internal policies, the risk assessment policies, the customer due diligence policies, the training programs, the management information system, and any sanction screening process. Now, when I say sanction screening process, this is something new which is now used by DNFPBs, but has always been used by banks. Banks always have a KYC process, and they used to do a sanction screening process, which most of the DNFPBs are now adopting to do it in-house to do a world check. This is just an example of AML policy manual. I'll just spend a minute here for you to go through the index section. So the index section is basically, it talks about background about the company, the beneficial owner, the compliance manual, and the compliance officer, who is the regulator of that company, whether it's MOE or any free zone or DED, who is the regulator. What are the regulatory requirements? What are the procedure of licensing with the regulator? And what is the corporate governance structure in the company? What is the remuneration structure? What are the duties of the management? What is the system and controls in place about internal audit, management information, code of conduct, code of ethics, outsourcing, any BCP plan, business continuity plan, or any disaster recovery plan. So everything needs to be documented. Most important is the whistleblowing policy. What are the, how is the whistleblowing policy documented in the country? Then what are the conducts of business requirements? And I'll come to the end. Yeah. What are the forms required in case of notification to FIU or internally by an employee to the compliance officer? So all those things should be included in the policy manual. This is a format of a CDD form, the customer due diligence form, which talks about the name of the company, its legal structure, its owners, what kind of services are we going to provide, what is the source that we know the client, what kind of screenings we have done, what are the results of the screening, who are the directors in the company, who are the shareholders, what is the source of wealth they have. Then what is the business income for the year? What is the background of the customer, the client, and the management? What are the services we are going to provide to them? How is the risk rating done? What are the criteria we have used to assign a risk, whether low, medium, or high, and what is the score rating we give to those clients? And what is the periodicity of review, whether we are going to review it on every year, every second year, every third year, what is the periodicity of review, who approves the customer due diligence form, what is the internal review process. So everything has to be documented in the CDD form. With this, I hand over I ask Rishi Chawla to take up the next session from here. Thank you.
Thank you, Rishi Agarwal, for such a nice session. So I'll just share my screen. So it's for me to take up the session, but I have to. Right. Okay, thanks Rishi Agarwal for enlightening us with all the information about the policy and procedure manual, which I think is a very important one, and the forms for customer due diligence. I think that is also very critical. Like for example, when we at Premier Brains onboard any clients, we spend a lot of time in doing customer due diligence. It might be a little painful in the beginning, like when you're starting a new client and you kind of disturb them in the beginning itself. But at the same time, it's very critical because this is a very serious law. Okay, so I'll just get into it. First screen is about when do we report? Now, what is the timing of reporting? This, I mean, like for example, if you come across a transaction, so the first question comes, what do we do? So the law says you have, whenever there is a suspicion and there is reasonable grounds to suspect a transaction, you should immediately report it without any delay. And I mean, there are obviously issues sometimes, like whether you can share your confidential information of clients with the authorities without informing them, and you have agreements in place of such nature. So for accountant, auditors, and legal law firms, there are certain specific provisions which you can read in the law. But overall, this information has to be disclosed on an immediate basis rather than taking too much time. Because if there is a delay, there can be chances of, you know, your customer comes to know about it, or there is any chances of, you know, the customer goes out from the market. So the authority wants to know about it on an immediate basis. So it's very important. The law very clearly says that. So we have federal law, decree law says about this, and then we have cabinet decision of 2019 says very clearly about it. So which is here. So how do you report it? You have to actually raise a STR. So we'll talk about what STR is. So STR we will cover up in the next slide. So now when and what to report. So so anytime, in case you come across any kind of illicit funds, like if there is any suspicion of armed trafficking or drug trafficking, there are certain criteria which I'll go in detail later on, but I just want to touch upon that. Whenever you come across any kind of trafficking, smuggling cases, or any kind of doubt that there is some terrorist organization involved, or the nature of the transaction is doubtful itself, then rather than spending too much time on understanding this thing, if you are suspicious, so bottom line is suspicious, then you should report. For example, in our case, we come across a transaction where there are a lot of money being transferred to the bank account, and that doesn't really reflect with the activity of the company. Now, the doubt was, their business nature is not that they should have so much of money in the account. So we felt suspicious and we reported it. So, whenever you come across anything of that nature, which actually does not really ties up with the profile of the company, or there is unusual behavior, or there is you read some negative news in the media, these are all enough information for a suspicion. So immediately you should go and report it in the 𝐀𝐽. So there is, the law says if you are genuinely believe there is a suspicion and you report it, there are no penalties if that doesn't come out to be true. So don't worry too much. If you genuinely believe that there is a suspicion involved, then go ahead and report it. So this is the kind of reports which are available. Whoever is in the DNFBPs, I'm sure you must have registered in 𝐀𝐽 already, because 𝐀𝐽 is the only channel to report on anti-money laundering law. So there are certain reports, like you have STR is suspicious transactions report, SAR suspicious activity report, then additional information file without. So these are different kinds of reports which are available on the 𝐀𝐽. Once you go there, you can find these. And use this whenever you come across any transaction. And what happened in case of anti-money laundering is there's always a worry that should not do something wrong. So the idea is, if you are really genuinely feel suspicious about a transaction, then don't hold on, rather report it. Why I'm saying is that in one of the sessions of the ministry, I remember very categorically they said that, for example, the authorities are going to look for criminal or these kind of people all across the UAE. So, for example, if somebody passed through your window and get caught in another place, then the authority would like to find out why it was not caught by you. So what are the kind of controls you have put in place in your organization to control such kind of suspicious transaction to pass through? Because as DNFBP, the responsibility is upon us to really take care of it and report when there is a suspicious transaction. So don't worry too much. If you really feel suspicious, do report it. And you can always write to the authorities. There you have 𝐀𝐽 message board where you can talk to them. Then if there are any specific queries, this email ID can be used. For general inquiries, there's another email ID that can be used. So interact and be very active on it, because there is no room to justify later on that why you could not report it, because that's the expectation. Okay, so going to the next slide. So now another question happens is, for example, if you come across a client or somebody you're doing business with, and you have done an STR report, now what do you do? Should you kind of say no to them, or what to do? What's the next step? So basically, the idea is there are penalties for tipping off. So basically, any act which can lead the customer to believe that you have found about it, and there is some doubt there, that is dangerous. So you have to be very, very careful that your transactions or your communication with that person should continue to remain same and should not change. So it says very categorically. And also about the confidentiality, the law, Article 17 says that even the authorities, for all the information which you share with them, is going to be kept confidential unless there is a case going on, investigation, which applies in most of all the laws. So there's a high level of confidentiality involved, and the law is there not to punish for reporting. They are going to look for responsible DNFBPs to report whenever they come across any cases, and also not to act or behave in a manner where they can tip off the people that they have been found out or they run away. So it's very important that due care is taken when you come across. So keep the transactions in a normal way. Even the law, like Article 13 says here that, for example, if you are doing a customer due diligence and you're not able to get enough information from the client, so what does it mean? Then you again get suspicious why they are not able to provide the information. If you have enough grounds to believe there is a suspicion around it, then you still need to go and report it in the 𝐀𝐚𝐮 to the FIU. And also, there should not, but you should not force it or say you are not giving me this, or should not create any kind of acts which make the customer believe that you're going to report it. So this is very, very important. So now another area I want to discuss a little bit about is the UAE Risk Assessment outreach. In 2018, before the law was implemented, actually UAE has spent a lot of time in doing a proper assessment of the various kinds of risks, which are exposed for AML related in UAE. So they've done actually risk assessment program. So let's deep a little bit into it. So one of the risk assessment, I'm not going to put all the law, but I'm just taking out the relevant portion. So just to show you, how the authorities look at different industries. So in the national risk assessment for the UAE onshore companies, the companies with the highest inherent vulnerabilities were banking, money exchange houses, precious metal. These are the highest, which are exposed. So this risk assessment also means this is done based on their reviews of different kinds of parties who engage in transactions in UAE and the kind of their profile and things like that. So these are the highest inherent risks. So companies in this sector should be more vigilant when they are doing due diligence with their customers. The second comes the medium high inherent vulnerabilities, which comes the lawyers, notaries, real estate agents, because it involves very high level transactions. So again, the point is it's not the real estate developers, it's the real estate agents, because they come across a lot of people and they help them, buy property, sell property, a lot of those. And similarly, company service provider, they come across a lot of companies and they know internally what those companies are trying to do. So those are in the medium high vulnerability. Then we have precious metal as well, which comes into it. Again, see the dealers in precious metal is above there also and here also. But this is because they wanted to ensure that this has been properly dealt with. Then we have broker agents. The medium inherent is auditor comes in the medium inherent category, and the insurance investment as well. So the next one for the free zones, financial free zones, the highest is again the exchange houses. The medium high comes to banking, brokers and agents, custodian of the wealth management. The auditor accountants come again in the medium category, and general insurance is the lowest. So it's the important point to note here is, once if you are registered in under AML, then you have to see in which category your business belongs, so that your customer due diligence exercise, the screens which Rishi Agarwal shared a while back, and also your policy procedure manual should be addressing this point there. So you should know that it's not necessarily be your client is a high risk client. It could be your industry itself which falls into the high risk category. So which means as a company, you need to be more vigilant. Right, so there is another one is a target financial sanctions risk assessment, which was done. So this has been, there are 2-3 things which were carried out. There are certain, obviously, countries which are being listed by United Nations Security Councils. So definitely no to any kind of business with these places. You have Al-Qaeda, Iran is there, then Daesh, Iraq, which you cannot do, Taliban. Of course, these are the countries we hear all the time. We cannot do business with those places. Then proliferation of weapons of mass destruction. We know North Korea and Iran are the two countries where there is the nuclear weapons issues which are going on for a long time. So if we cannot do any transactions with those countries, we have to be very, very careful that not only us cannot do business with those countries directly, even if our customers or suppliers are dealing with those countries, we have to be very, very careful, and I would rather avoid it. Yeah, so because we need to have a very clean picture that there is no transaction with these companies, because these are on the sanctions list. And there is another list of high risk UN sanctions regime, these are another set of countries: Somalia, Iraq, Congo, Libya, South Sudan, Mali, Yemen. So these are the countries you have to be very, very careful. These are also coming into the high risk category. So this is an important thing to keep in mind when you are kind of reviewing your customers and see where they belong. That's very important. So let's dive a little bit into some of the risk factors. We have already discussed that some of the risk sectors which UAE consider one is the gold and precious metal, and then the real estate. So the Risk Assessment Authority has done actually a deep dive into various kind of red flags that one should be very, very careful. And actually this should be built into your policy and procedure manual and your customer due diligence, because that is where we are actually gonna find that out. So some of the red flags which has been listed, it's actually a quite long, lengthy list. So I've tried to just take the bullet points and discuss a bit on it. But to get to know more, you have this information available with the authorities. You can take it from there. So customer behavior. So for example, if you're dealing with customers, you can see suddenly there's a sudden increase in purchases, which usually not been done in the past, or there's unusual kind of buys. So for example, somebody who buys for 5,000 suddenly start buying 50,000, or and your customer, for example, a student buying high volume of gold doesn't make sense. So these are some of the customer behaviors to be kept in mind. Even the company behavior, you have to see what kind of deposit, like they have unusual deposits they're giving for buying, or they are trying to buy through a very complex corporate structure. They're saying that, okay, fine, we will buy this much gold from you, but 25% will be bought by X, 25 by Y, and the other portion by Z. So they're trying to split it out and things. So these are all indications of something going wrong. So be careful. That's something you have to be very, very careful not to do it, not to allow that to happen. And there can be trade-based behavior like cash payments or high value. And another area which I have actually come to know in the document there, which has been talked quite repeatedly, is about the custom documents. So there can be chances that the custom documents are being amended, or there's something wrong there. So if you are selling, there is a bill of lading and things. So it's very important to ensure what you're selling is actually reflecting on those documents. That is very, very critical, because there are instances been identified where the custom documents are amended in a manner that it does not really, put a, spotlight on the customs when they export it out from the country or import it or things like that. So that's important. So you have to be very careful looking at the custom documents. Product differentiation. So that's another interesting one. For example, we know gold is sold in 22 karat, 18 karat, 24 karat. But if you see somebody selling 23 karat or 25 karat or say 19 karat, which is unusual for this industry. So that's again, a way to kind of do wrong things. Why is that? Because in that 23 karat, there is no real market. So people can fake the prices by really, inflating it too high or deflating it too low just to manage the fund flow. So be very careful about those kind of transaction. Then payment behavior also need to be seen. For example, if companies are giving loans to foreign companies at nil interest rate, doesn't make sense. So it has to be looked into what is the, so if you're dealing with companies of that nature who are in any kind of doubtful area, be very careful and do the reporting if there is enough suspicious ground to do that. Okay, so I'll move to the next slide. So in the real estate, there are also certain areas which red flags are there. Obviously there's a very long, lengthy list, but I'll just pick the few ones. Then if the country and geographic risk. So if there are buying, selling of properties that's happening in location, which is first of all in the sanctioned countries. So if something is happening in Iraq or Yemen or Iran side, you obviously have to be careful not to indulge in those kind of transactions. And in case if you come across anybody who is doing it and you know that that person may be dealing in UAE but still doing transactions in those countries, that gives you enough grounds to feel suspicious about it. So be very careful and always talk to your compliance officer and keep the compliance officer very, first of all, informed of all the changes, because in AML, the changes are coming every now and then. The people are getting added to the list and removed from the list. At the same time, there are more what you call documentation being done by the authorities, and they keep informing to the DNFBP. BP is the 𝐀𝐚L registered entities. So I mean that's important text to read, and I highly recommend you should spend some time to understand and also try to absorb the information into your policy and procedure manual and your customer due diligence. That's very, very important. So again, another risk in the case of real estate, which is the transaction risk, that there can be under and overvaluation of property. So if there is, you can see that people are trying to do under overvaluation. There can be different reasons for it, but if it feels unusual for that person to do and there looks like something going wrong, just report it. Similarly, purchasing with cash, these are some of the elements it's better to be careful about. As I mentioned, maybe if it's not reported through you and the authority comes to find later on, they can always come back to you asking why it didn't come to your notice, because you are also registered. So this is very important. This is another small slide which I prepared, is basically how do we deal with, like for example, you have done a customer due diligence. So now, for example, somebody is low risk or somebody is medium risk, or somebody say high risk. Now what to do? So in case of a low risk, what you have to do is your due diligence on those customers needs to be accordingly been structured. So for us low risk, it's important to do a simple due diligence. For example, taking details of type of client, whether it's a PEP. PEP means politically exposed person, or you get the information about the country, nature of business. Just to do a high level review, it's a simple due diligence. And if you're comfortable, nothing is wrong, just go ahead. Then if there is a medium risk, then you do a standard due diligence, where in addition to what you do in a simple due diligence, you understand the intended business relationships, ongoing, what kind of business they are into. And to do a due diligence on a regular basis, not like once you have done it and you continue to do business with them. No, but you have to stop in between. Whenever the next transaction happens, again do a due diligence, because they in the medium risk, it might not have an AML transaction right away, but it can be a case where they're building up a story which they can play later on. So be very careful. And similarly for high risk, there is an enhanced due diligence. There's a very long list of things which can be done. So enhanced due diligence is very, very important to look at, and this should be very nicely reflected in your policy and procedure manual. So there are, if for example, your customer, that they're dealing with countries like Iran, for example, or Iraq or Yemen or any of those nature. So very important that you should have a very high risk due diligence, enhanced due diligence on those customers. So not only what kind of their, how do they do business, who are the owners and things like that. But you also have to find out what are the customer source of funds, monitor more progress frequently about how do they basically do business. So these kind of things. So some of the general red flags also I like to talk about here is we have something called, so the general red flags goes like this. There can be instances of fraud or adverse media, suspicious transactions, suspicious customer behavior, sanctions. So what it means. So if you dealing with company as a DNFBP, maybe you're not in the high risk or in the medium risk, but if you see a customer who is doing a business which is too good to be true, looks like the invoices they are trying to manage in order to move the funds around, so that's a red flag. Similarly, if you're reading something in the news, you see some wrong information, there is some interconnection. For example, we come across there was somebody opening an offshore company, and we were doing the due diligence. And in this due diligence, we come across some connection with some political party, and immediately we just stopped. Stopped in the sense, not stopped in the sense to put it into the bracket of a suspicious transaction and report it. So this is what it means. So be careful about anything of that nature. So not necessarily you will find all the information in the document. See, another important thing to know is all the information you're getting is getting from your customer, right? So they will provide what they want to tell you. So your due diligence should reflect a little bit of independent search so that you can find as much as possible about them. Unless if there's nothing wrong, there's nothing wrong. But if there is something wrong as we come across, do not wait, go and report it. If the company dealing too much in cash, there are certain businesses who are very high cash incentive business, intensive businesses. So you need to see if this is the nature of the business, or suddenly they have gone into the cash territory, or what is happening. And the companies who are doing third-party payment, this is again a very, now if you recently have noted, the exchanges, the financial institutions are very, very strict on the third-party payment. So for example, if you are paying on behalf of somebody, actually it is not allowed unless your license allows you to do it. So these kind of, because it's all means of avoiding the channels, and pass the money through. So it's very important to be very, very careful about all this. Also, you need to see if the companies have a very complex business structure. There is a subsidiary, and there is a parent, and there is another parent. There can be a genuine reason, because large companies normally have a very sophisticated corporate structure, which is okay. But there can be certain businesses who don't have to be in that complex structure, but still they keep it in order to hide the UBO, or to hide the real place from which the transactions are originating, or things of that nature. So if you have grounds to believe that this has been intentionally done, better be careful and report it. Similarly, if there are high risk jurisdictions, this should be on your top of high risk categories, and have a better due diligence and a more enhanced due diligence on those places. So I'll just see my time. So, okay. Right. So another one, as I mentioned, that the ministry continue to issue a lot of circulars and guidance from time to time. There's one presentation was shared in November 2021, which gives a little bit another kind of research which is done by the ministry. So they have appointed Executive Office of the Committee for Goods and Materials Subject to Import and Export Control as a central authority to ensure implementation of target financial sanctions in the UAE. So what they have come out in their research is that that most of the highest suspicious transactions are happening in shipments of dual use items. So what is a dual use item? Dual use item is something like a chemical which can be used in the factory for producing a particular good, or it can be used for chemical weapons, or it could be used for, those are the dual use item which can, can be used for right and wrong purpose at the same time. And similarly, computers can be used for office use, and computers can be used for, any kind of wrongdoing by way of, creating a network and things like that. Okay, so shipment of dual use item is one of the highest suspicious methods, and use of front or shell companies. So shell companies are basically don't have any people or any kind of real business behind, but these are prepared in order to do transactions. So if you come across transactions with shell companies, a lot of front companies doing those transactions. So those are high suspicious methods of terrorist financing. So better be careful and report it. In case of assets and fund transfer, the two ways which has been identified is use of forged documents and bill. As I mentioned a bit earlier about forged documents. So there can be, the custom document is a very, very important document. So, bill of lading, for example, what is been, what you have sold and what has been shown in the bill of lading has to be in sync. If it is not, that creates a suspicion. So what's happening, why it's been done? And there can be bank wire transfers, done between high risk jurisdictions. So be careful. So any transaction of that nature comes into the high risk category. So overall findings on the transaction terrorist financing funds is as below in UAE. So what is considered medium and low? So collecting terrorism related funds in the UAE is considered as a medium to low category. So you can see that there are a lot of high controls still in this area. But though, there's still, there is some vulnerability there, but at least there are more controls. But what is very high is moving terrorist-related funds through UAE. So a lot of shipments coming in and out. Even if it might have goods, it might have all the real facts around it, but it can still be used for terrorist financing. So if you are in the export-import business, be very careful. There can be certain people or countries or companies who are trying to use your company for money laundering related issues or terrorist financing related issues. So similarly, using terrorism related funds in the UAE, this is considered in the medium category. So overall, overall terrorist financing is medium to high. So that means still there are people or companies trying to use means to do terrorist financing related acts here, but the authorities are very, very active, very, very active in this area. At the same time, it is our responsibility also to give a helping hand, being very careful about when we deal with our customers. So some of the patterns which they have noted is that which happens quite frequently is that smuggling of gold happens a lot. So for example, people say they extracted the gold in a sanctioned country. So they move the gold to another, say, second country, which has not been monitored very strongly on the AML. And so the origin is being changed there, and then move those transactions back to UAE. So this happens. This happens quite frequently as per their analysis. So be careful if you are into gold import and things like that. Just have a good due diligence about your customers, about your suppliers, sorry, to see if they are able to give you the right goods and they have a good due diligence as well at their end. A lot of times people use family members or third parties to buy real estate. So if as a real estate agent, if you see that's happening, be careful. A lot of not-for-profit organizations are used for misuse of funds. So if there are people approaching, especially a lot of in the social media, companies can approach as not-for-profit and sending pictures and blah, blah, blah. So be very careful, because those are some of the most popular means of raising funds for wrongdoings. So if there are genuine not-for-profit organizations, those will be definitely authorized by the UAE government. So the first thing to note is how well they have been licensed with the authorities before at all you want to work with them. right? So as I mentioned, forging documents, bill of lading, especially in the shipping of oil and other restricted chemicals, quite popular. Reason being, chemicals is a dual use item. So that happens quite a bit. Shipping of oil is because it's a high value item. It's easy to move a lot of money with that those transactions. So it's important that to do a good review. So what it means is that what you're buying and what the document says and what is physical should be in sync. Should not be speaking to different language. As I mentioned, using front companies of foreign to hide origin of gold shipment is also quite popular. As I mentioned, they import from, extracted from a sanctioned country, move to another country, they change the origin of those items and move to a different to UAE. So these are something to be very careful about. Some of the red flags they've listed is like, if this happens, for example, in your business. So what it means is, for example, in my business, if I'm sitting today and I go look at my clients and do a due diligence, or for example, we are auditing the financials, we come across and see that a lot of cash withdrawals in short succession, and and there are funds moving from high risk locations, and there are shell companies involved, and there's enough ground to doubt that why it's happening, because that's not a normal business model for this kind of activity. So if there are risks of those nature, don't wait, feel suspicious, go and report it. So as long as you're genuine in your report, there are no penalties for if it doesn't come out to be true. So what authority wants it, that you have to be aware, report it if you have grounds to believe, and let the authorities decide whether it's right or wrong. So another very important set of recommendations by the authorities, that all these red flags which they have listed in the presentations, you can always get this presentation from their website, that all the red flags should be part of your screening system. So when we say screening system is your customer due diligence, your policy and procedure manual. So you should, whenever these kind of red flags or new research aspects come to notice, just bring it back into your policy manual, so that, or your customer due diligence, so that you have enough to reflect. Because what happens is the compliance officer, though, is in charge of this area, but is not the only person in the company. There are a lot of different people interacting in different ways. So, and how do they find out what to do is from the screening system, which is your customer due diligence and your policy manual. So it's important that any red flags listed by the authority should be reflected in your screening system. So conducting enhanced due diligence is very important if dealing with high-risk jurisdictions. That's so enhanced due diligence, a lot of different elements. You can search about it and touch base with us later on if you need to know more. And also if there are any items of dual use, so if there are some chemicals which can be dual used, or you have grounds to believe it will be dual use item, little bit more careful and verify all the parties involved in those transactions. This is some of the recommendations from the ministry. And there's another circular issued on 19 December 2021. Some of the key points I've just taken out from there is that, so the DNFB needs to adopt a list of high-risk jurisdictions. So all their due diligence process should categorize high-risk jurisdiction and adopt certain countermeasures. So what are those countermeasures and what is the enhanced due diligence? It's all mentioned in this website, which is nmlcftc.gov. So you can always go to this website and find. So there's a list of high-risk jurisdiction, and there's a gray list. So you need to have a high monitoring for a gray list. So all this, what it means is, see, this is another circular which was just issued last month. So one has to pick all this information there and go and reflect it in your policy and your due diligence practices, because this is the role of a compliance officer actually, to be aware of all the changes happening. So your compliance officer should be on top of these things and ensure that they are doing it, and always better to always talk to them to find out what's happening. Another thing is that all the DNFBs are prohibited from opening any branches or representative offices in the blacklisted countries. So very, very important. Be careful that doesn't happen. And also another interesting point is when you're dealing with any high-risk jurisdictions or blacklisted countries, even relying on third parties for some of the information is not good enough. So, for example, if you want want to know about your customer who is in a high-risk jurisdiction, and you appoint a third party to do a due diligence and report to you, that's not good enough, because they can as well be connected with those people, or there can be you cannot trust it. Bottom line is so do your own due diligence. So it needs to be more careful when it's high risk jurisdiction. So this is what authorities try to say. AML return filing. So in the AML return filing, obviously every year there's a return to be filed. I'm sure if you are registered in GoAML a year back, you must have done the return filing. It has already been done for 2020. Now the 2021 will happen later on. Normally an email comes from the authorities, which they ask you to file a return, and there's a format which needs to be filled. So I'm not going to go very detailed in this one because this has already been done, but maybe there are some people who are new to it. So I'll just show you some of the content that goes into it. And actually it's not very easy. There is a lot of information. You have to really spend time developing it. So there's a lot of information. You actually have to spend time developing it. So I'll go through it list so you know what kind of things are required. And so whenever you're dealing with your customers, it's always good that you have your system very much in place to bring that information for you when the return filing is due. So authority want to know a lot of information. Maybe they will not ask you immediately, but at the later date, it is required to be done. So let's see. So which year it has to report? It has to be reported for a calendar year. What to report? Normally there's a questionnaire which is sent. So questionnaire is not like yes and no type of a questionnaire. Questionnaire means a lot of questions and needs to be filled up with information and data. So that's how it is done. So UBO, I'm sure you must have looked at UBO filings. So UBO details of the registered entities to be given, number of employees, turnover details, so giving the range of what kind of turnover the company is doing. Then customer details. So there's some areas which actually you need to spend more time understanding. This customer is one of the areas. So the number of customers, what kind of business, how many individuals, how many resident, non-resident, residency, not no corporate customers. So this kind of breakdown has to be prepared. So it's not like a very easy one to do it, but your system should be built in so that you can get this kind of information when it is required. And always ensure that you have a proper reconciliation before you file, because there can be an audit by the authorities later on into the information file. So it should tie back. It's very important. And by the way, the records have to be kept for 5 years as per the law. So it doesn't mean that if they have not audited this year, they cannot audit you for this year later on. They can always audit this year in a period of 5 years. So keeping the records in proper shape is very, very important. So there's a question like, does company record nationality for transaction above 55,000? So these kind of questions are there. So the idea of these questions is to understand how good or strong your due diligence is. So it also means that you have to, if you've done your one filing already, you will know what kind of information you need to keep. So be prepared for it. Recording client nationality, so taking ID copies and things like that. You don't have to give the ID copies there, but you have to say whether you are keeping it or not. Then if any of your clients are PEPs are politically exposed persons. So this is defined very nicely in the law. So I'll not do it right now. So maybe you can speak to your compliance officer who can guide you more on it. So other thing is, does your establishment provide services like product service for establishing legal entities, more like for corporate service providers. So yes and no. So it's provide any domestic transactions receive or pay within US. So if you are establishing some companies, whether those companies are domestically, are here in UAE and sending you funds, or there are companies outside who are sending you funds. So what kind of clients you are dealing with. So you have to report if you have accepted or paid cash above 55,000. So that's again something you need to report it. If you have used any virtual currency payments, so virtual currency is self-explanatory, and why it is like that, as we know, for money laundering, this is one of the easiest medium which has been used. So you have to report it if you have used those kind of medium. Any payment over 500,000, so all that information is required. So there are more things like, so does your company does any internal risk assessment in terms of MLTF risk, high risk, low risk, and your medium, as Sri Agarwal spoke about a bit earlier. Then, like, have you appointed a compliance officer? So compliance officer need to be actually very sure that you have a compliance officer. So many cases we come across where people just, okay, fine, for paperwork, let's put anybody as a compliance officer, and that person may not necessarily also know whether he's a compliance officer. So please don't take this point very lightly, because compliance officer is a very serious position. It's a very responsible position. And so a person should have enough background of compliance, first of all, understand the compliance in a good way, and really spend time understanding what's changing around. Because if something is missed out, and the report is due, and there is, for example, a new question which was elaborated by the authorities earlier, but the compliance officer did not notice it, it can land the company in a problem, because there are reasons why the AML law has been implemented, and it's a serious law. So compliance officer plays a very, very vital role, and the compliance officer should be, I would say, very frequently asked about updates on the policy manual or the customer due diligence, whether it's been done or not. For example, many companies can, okay, fine, for the sake of AML law, let's have the paperwork for customer due diligence and the policy manual. But do you really go and check whether the people are really filing it? Have you ever said no to a transaction? Or is it like a business push? Okay, fine, we will see the paperwork later. Let's do this. It's a good profit. So, it's very, very important. Don't land into a bigger problem just because of easy with the customers or their due diligence. Important, put your systems in place, because authorities really like DNFBPs and the FIs and the exchanges to be careful when they're dealing with the customers. Also, your customer due diligence, whether it's a risk-based, how do you identify your high risk? So there is a criteria, as we mentioned, all across the law. I know law has different version. There's a law, then there's an executive regulation, there's a circular, then there are a lot of things which are there. But it's important somebody reads it and use all that information, especially the risk assessment which is done, all the red flags which are identified. That's a very, very well done, I would say, exercise. And try to use those information in developing your manuals and your due diligence. So does your company keep transaction for 5 years? That's important. And again, as my colleague mentioned a while back, AML training for staff, very important. Like in Premier Brains, every month or we are trying to at least touch upon this topic once, so everybody knows what's happening. So this is a very important item as part of our policies, definitely. There are additional questions for real estate companies, the kind of value of real estate agents, basically, value of properties bought and sold, number of property sales, purchases, and corporate service provider. Also, a new set of questions are there. Not new, additional set of questions are there, such as total value funds in and out, total fees for acting as a director, or there is any nominee director. So nominee director could also mean, like somebody opens a company and appoint another corporate service provider to act as a nominee director for another person. So in a way, they're hiding the identity. So if the company is acting nominee director, So they have to disclose information about it. So acting, even if choose to act as nominee shareholder, it's very, very important that a very deep due diligence is done, and there should be a real genuine reason to do this, and not just because there's an opportunity out there. For metal and stones, and there are obviously quite understandably buying, selling values, whether you sell jewelry, whether you sell bullion, this kind of transactions. Right, so I'll just come now very near to the end of session. So let's look at it. What are the various penalties? So this is the last slide on this. So this is important. So the penalties are actually, the first normally happens is a warning. If it is a small case, then there's a warning which has been issued. But if the case is bigger, there are very high penalties. So it ranges between 50,000 to 50 million. So obviously not like, there's one formula for penalty. So therefore different kind of administrative penalties between 50 to 5 million. So there are different elements involved, whether the person is helping, helped for terrorist financing. So there are very well explained reasons how it has been done. But there are very, very, very high penalties, definitely, and there's imprisonment if it is proved for no less than 10 years. So that's quite high. So there can be authorities can ban the violator from working in the sector if they feel they are not doing proper due diligence, or they feel that they feel not comfortable allowing the company to work. They can actually cancel the license also. That powers are given. They can suspend the managers, board of directors, supervisory committees, constrain the powers of board of directors. So a lot of powers are given to the authorities. So it's actually a very serious law. So the authorities, if feels not comfortable, they can ask for more requests for regular reports and things like this. So a lot of powers are given to the authorities. So this is just a one snapshot. So now the last slide is how Premier Brains can assist you. So one of the things which we have done is assessment or to help in registering with the GoAML, helping the registration process, support for a compliance officer, drafting policy and procedures, customer due diligence, and monitor how to actually define high risk and things like that, because our compliance officer actually spend a lot of time in it. And how do you identify STRs? How do you actually report the STRs or suspicious transactions? And the another one important one is staff trainings, very, very important. So with that, I come to end of my session. So with Q&A, I just give the floor back to Moin. Thank you.
Thank you so much, Rishi Chawla and Nisha Agarwal, for such a wonderful presentation. I personally find it very useful, and I hope that all the attendants must have found it very useful for them. So we have some questions from the participant. There's the question that if we file an STR against the client, but we need to continue that sort of like conversation with our customer. So what to do if they want to place an order with us, like they want to do some trade with us, but we have already filed an STR. So how can we refuse without like telling them that we can't communicate with you? So if you can advise on that.
That's there's no straightforward answer to this one. It has to be looked into situation that what kind of the transaction was there which led to filing of STR. So because the law requires that the first thing is that you should confiscate any, you should take custody of any assets which you have of the client to make sure that the transaction does not repeat. But in this case, unless knowing the complete facts of the case, it's difficult to answer this question that how do you continue to trade without letting the client know. But one thing is very clear, you cannot let the client know that you have filed an STR because that tantamounts to tipping off.
Yeah, tipping off is very, very dangerous. Better be careful not to. It's not an easy situation to tackle, but the authority says that we should not tip off, and it should not really create any kind of condition where the person can run away or things like that. So yeah, so this is all I can say at this moment.
Right. We have one more question that can a company have their own risk assessment criteria for the risk rating of a new customer, or there should be some sort of standard risk criteria which must be there?
The risk criteria is it's pretty standard, I would say, because it depends on the geography profile, and there's nothing like it can be tailored, but definitely the parameters are different. The parameters will always depend on the nature of industry, service, products, nature of transactions, region of trade. So that will always be different.
Right. So just to add into it, I mean, when we say that whether it is need to be like a standard or it needs to be, you know, as per the company standard, I would say the red flags is a very important thing to look at. As the authorities have spent a lot of time identifying some red flags. So just see if those red flags, first of all, are as part of your due diligence or not. So if those red flags are part of your due diligence and you are doing more due diligence on top of it, nothing stops you. But it should not go below that. That's the way I would look at it.
Right. We have one more question. Who can be a compliance officer? Can this be someone from the company, or does it require any sort of specific certification like that?
The roles and responsibilities of compliance officer are very much defined in the law. So if anyone has to take up that role, he can be a compliance officer, but he needs to update himself by attending regular courses and trainings to ensure that he is aware of the challenges which are there in the role. And from outside also, some companies outsource this function pretty well. So both the options are okay for the company, for the management to decide. If they can find a competent person within the company who can undergo trainings and read about the law and understand the roles and responsibilities and the challenges in training the staff, coming up with policies, procedures, and ensuring that the compliance is ensured, and he can deal with the FIUs in case of any enforcement requirements, then definitely it can be an internal person.
Yeah, I agree with this. And basically, the bottom line is you can put anybody as compliance officer in the company, but is that person really competent and actually doing that role, or is just for paperwork? So if it's just for paperwork, better speak to some expert to do it right first time rather than for the paperwork, because this is a serious law and it can really lead into big problems. So competency is a very important word in this case.
Right, well said, Rishi. We have one more question that if there's a business and we have to do some sort of risk assessment for that company, like if we are having business with some company and we have to do some risk assessment for the company, so do we just need to do only the risk assessment of the company, or for those people as well who are running the business?
Definitely it extends to the management. So the shareholders and directors and UBO, if different from the shareholders, is part of the risk assessment profiles, risk assessment process, sorry. So it even extends to like what kind of products you are dealing, what kind of services you are offering, where the transaction is originating, which countries are you dealing. So everything is covered in the risk assessment.
Right. We have a question that can we do business with a customer or supplier in sanctioned country?
It depends on the transactions. Like sometimes there are businesses happening. All the businesses are happening in the sanctioned countries. Even the US goods are sometimes available in those countries. So there is a process with proper approvals, COFAC approvals and everything. It is possible that it is an allowed transaction. So there are
Yeah.
exceptions to those to sanctions.
Right. So we have one more question that is bit relevant to the first one. That what if the filing which we have made against the customer, that suspicious one, if the suspension turns out false later, and due to which clients suffer losses, so what remedy they may have, or if this amounts to some sort of like professional liability on the part of service provider?
I don't think so. There's any remedy if the suspicious transactions turns out to be false.
Right. That's what we have in our Q&A session.
Thank you.
Mr. Vinay Agarwal is raising the hand. I think he might have some question.
Yeah, you can speak if you want.
Hey Rishi,
Hi, Vinay.
both are very good presentation. Well, this question just popped up when Rishi was responding to the first query, and this query which was asked last was from me only. It was about the suspicion based on which the transaction was reported to the AML, and that suspicions which service provider has turned out to be false, that results into a loss to the customer. So what will he may sue you? That how you didn't do your part on your time. And
Vinay,
because I suffered a loss, so will this amounts to professional liability?
Vinay,
Because you are taking the best call.
yeah, based on the suspicion, if anything is raised to FIU, then it is the responsibility of the authorities to do the investigation. And our responsibility is to earmark any suspicious transaction.
But yeah, but this you also mentioned that if you have a suspicion, so you don't do the transaction, and you don't tip your customer that we have reported your transaction, but you are not proceeding with that one. So that is like a halt of business for him.
So Vinay, just to add into this, we didn't mention anywhere that you don't do the transaction, because if you, for example, anything which amounts to a tip-off can land you into problems. So for example, if you say no to the transaction, you're actually tipping off possibly, right? So you have to look at the case to case. How do you ensure that you do the reporting and really not land into a tip-off kind of a situation, first of all. Secondly, in terms of penalty of limited liability, penalty of, for example, not doing business. So ultimately, the decision is, first of all, yours, whether you want to do business with those companies, and for, why will they sue you for not doing, for example, if you want to sell some goods or buy goods from them, if you don't want to do transaction, that's it, your decision.
Okay, so I'm just trying to assess the risk here on part of the service provider as well, because service provider in good faith evaluating every transaction, and let's say transaction for a real estate deal, a very good deal, and the customer wants to have a promise to purchase to buy a premise for his business, and because of the suspicion, whatever the reason is, that she was not able to buy that property, and that the basis of the ground on which the suspicion arises, the ground was false or incorrect. So he lost that deal. He said, okay, because of you not being vigilant enough to validate the suspicion, I lost this transaction. So he may go legal. I'm just trying to emphasize that risk here.
No, Vinay, this is not possible that, for example, just because you have not done a transaction, which is unless you have a contract in place and you're already in business, that means you will be charged. Yeah? Like somebody can sue you only if you have a contract and you have not honored that contract, correct? Somebody cannot sue you if there is no contract in place.
Yeah, of course. That's
and the due diligence should happen before the contract is signed. So if you have already signed with that person and you have given it a go ahead in your customer due diligence, so your reporting should have happened earlier.
But the suspicion can arise at a later stage also, right?
Yeah, so if the suspicion can arise at a later stage, then you have to report it to the FIU and let them decide about it. So, but if you kind of stop in the middle and kind of create a system, create a possibility of a tip-off, it's a danger. So, you know, I cannot answer you a right or wrong answer straight away because it's again very transaction specific. This needs to be, you know, discussed with the compliance officer to come to a solution. So it has to be dealt in a very, very diligently and very.
Yeah, I understand. That's why I was thinking of this risk here for the service provider as well, because people are crazy here. They can do something, and you know, they can put service provider in a difficult spot because of that. Because
that's, you know, a lot of things can happen, but ultimately what the bottom line is, we have to follow the law. Whatever happens is a secondary, because the law will protect you first if you are doing a diligent job. So if I am in a situation like that, I would rather follow a law than worry too much about anything else, because ultimately there is no excuse for doing a wrong thing. We cannot do a wrong thing. That's it. So again, this is something a compliance officer should spend time on on that transaction, take a call on, you know, on that case instead of generalizing it, I would say.
Yeah, that's true. That's fine. Thanks.
Thank you.
Thank you. Thanks. Thanks everyone for attending the session.
Moin, you are on mute.
We have one more question. I think Rishi Agarwal has already explained it, but we'll take that one. The question is that in Dubai, trading being done with Iran, Iraq, and Afghanistan customers, this transaction is related to VAT. Does it amount to applying AML?
Yes, we need to, with any sanctioned country, we have to ensure that why the transaction, how is the transaction approved, and why is it legal to have the transaction? Because normally it's, if you are trading with any sanctioned nation, then the approval process is different. And secondly, the routing of money is obviously, if it is not a legal transaction, it cannot be routed through banks. So it tantamounts to an AML transaction. It has to be looked into that.
Right. We have one last question, that what is the liability of the compliance officer?
It's prosecution and penalty. Not very good to know.
So that's it from the Q&A section. Thank you so much, Rishi Agarwal, and thank you so much, Rishi Chawla, for such an informative session. And thank you so much for all the attendants who spared their valuable time. I hope that you guys find that webinar very useful.
Thank you so much, everyone. So bye for now.
Thank you so much, everyone. Take care.
Thanks for attending. Bye.
Bye-bye.